Welcome, y'all. It's me, Trace, and I'm here to break down the most dangerous thing a trader can do, which is let their emotions not work in their favor. For me, example, I have something called extreme euphoria. Whenever this extreme euphoria takes place, I often sell off all my wins and end up in a losing trade, which I end up letting go all the way down till I'm negative. Basically what I saw before. So I could be positive 100, I could be positive 1,000. But because I want more profit, I'm gonna chase 2,000 and end up being negative 1,000 on the day. So that's really the big problem when it comes to traders like us. Emotions always taken forth, always being in the forefront of our decision making. How can you stop this? First, you need to understand yourself. Understand what ticks you off, what makes you sad, mad, angry. What is your emotional landscape looking like? When are your emotions strongest, and how can you mitigate the emotional and non-rational decisions that you may make whenever you're in like certain situations of even extreme positive or extreme negativity? For example, whenever I'm really down, I'm the type of trader to really believe in that trade. Instead of cutting my losses short at 10%, I ride it all the way to negative 50. But no, what you need to do is before you enter every single trade, I need you to write down the rationale, aka why you're taking this trade. What do you see? What type of news? Where is the stock positioned, and where do you expect it to go? This ties into the second point, which is your entry and your exit. How much does the stock have to reach for me to get in, and what stock does it have to be? What price does the stock have to be for me to get out, whether positive or negative? You could be like, hey, if SPY hit, I'm in a SPY call and SPY hit 770, I'm out. You could be in a put. You could be like, oh, if SPY hit 774, I'm out. But this also applies the same with exits, positive exits. Always set where you're gonna take profit at, or where you're gonna exit in terms of losses. But another thing you have to do, you have to understand how your rationale plays into this. Oh, you could be like, oh, my rationale didn't work because of this reason. And this goes off into tip number 2, which is always understand and journal your negative and positive. Your P&L needs to always have a reason behind it. Why did I lose? What type of price action? What's the volume looking like? What indicators did I use? Why did these indicators not work? You need to understand exactly where you're losing. Because positive trades make us rich, but negative trades make us better. So understanding where exactly went wrong in every single one of these key moments is how you really understand markets in general. Because every single stock, every single AI stock, every single different sector, they all have their own different key aspects. I'll sort of describe it like a personality trait, or like what you call it, a culture. For example, AI stocks are very volatile, jumping tens of percent in a day, a couple hours even. While I say more financial stocks, they're more stable, going up steadily. Moves aren't as drastic or rash as compared to AI. Another thing I could say about when it comes to stocks and analyzing why exactly did you lose is understanding what news was going on in the world why this happened. And if your setup is very vulnerable to news, then you need to think about what days to avoid in the market before market opens, so you can avoid those very emotional and high volatility days. For example, like when the Iran war started in February, there's a couple days in the beginning stages of that war where I was like, I'm just not gonna trade. Let me see what happens, because at the end of the day, the market is always gonna be here. The fear of missing out is such a ridiculous thing that we all have. I'm not gonna say it's a stupid thing, because we all have it. Oh, I didn't trade today. SPY jumped $13. I would have probably been in a call. But we trade for tomorrow, not for today. We're trading for our future, not for our current. We're doing all of this so your future you is good. So would you rather have the chances of future you making $5 grand now or losing your whole portfolio, or would you do the chances for you in the future having a million portfolio? Trade to always keep the shirt on your back. If you're negative, step back, take a week break, take a big loss, take a week break. Market always gonna be here for you. Take a week break, be like, yeah, I'm gonna take a week break to analyze where did I go wrong, and watch the market to see what it's doing. Maybe you need to adapt in that situation. Maybe you need to take a little step back to understand where do you currently fall in the markets. Because maybe you're not seeing the bigger picture. Maybe you're not seeing the smaller picture. But what is all the other investors thinking? That goes into tip number 3. Go on social media and go look for I'll say 5 different individuals who you really like their analysis of what's going on, and cross-reference every single one of them. I'm not talking about just listening and what you think you heard. Write their key points of their videos down and analyze what they're saying in common. And with that information, you could then grasp and take different sentiments that you hear in common between all of these people. And then you could be like, oh, that's probably what the market is thinking. Because at the end of the day, the stock market is like a mass consciousness where you have certain people. The market moves based off the majority. What the majority of people are doing is what the market will do. Which then goes to my final point, which is that in terms of the market, always understand that you cannot predict where it's going in the future. Let me repeat that again. You cannot predict the markets to an exact degree. You can only take a guess, a gamble. You can understand what points of support and resistance the market may be in and play off that. But we never know what SPY is going to do at the end of the day. Everything is a gamble. Everything is a percentage. The winners take their losses and cut them short. And their runners, they let them run so they can have high realized gains. But the losers, they cut their wins short. They don't let their wins run out and burst their wins. They're losers. They let them run all the way to the ground. That's me. That's all I gotta say for today. I'm trying to post a video every day with simple options tips. And next time, I'm probably gonna give you guys a video on support and resistance, and also break down the very simple deltas. The Greeks, we call them the delta, theta, vega, row of options. So sometimes you'll be trading and be like, oh, the market's going in my favor, but my options is still down. I'm basically explaining that. That's all I gotta say. Safety. Hope all y'all profitable.